Financial disclaimer. The information provided in this stream is for educational and informational purposes only and should not be considered as professional financial or investment advice. We are not licensed financial advisors, and the content presented here is based on our personal opinions and experiences. Investing in stocks and other financial instruments involves risk, including the potential loss of capital. Any investment decisions you make are solely your own responsibility, and you should conduct your own research and consult with a qualified financial professional before making any investment choices. The content we share on this stream may not be accurate, complete, or up to date. Market conditions and financial regulations can change rapidly, and we cannot guarantee the accuracy or reliability of the information presented. We do not endorse or promote any specific stocks, companies, or investment strategies. Any actions you take based on the content of this stream are at your own risk, and we will not be held liable for any losses or damages that may occur as a result. Always remember that past performance is not indicative of future results, and no investment is guaranteed to be profitable. Make informed decisions and consider your risk tolerance before investing any funds. By accessing and using this stream, you acknowledge and agree that we are not responsible for any investment decisions you make as a result of the content presented. You are encouraged to seek advice from qualified financial professionals for personalized guidance. Please invest responsibly and only with money you can afford to lose.
Hey man, just found the next guaranteed multi-bagger.
Hey man, you found another one? What is it this time?
Come check this out.
Okay, next please. How can I help you, young man?
We want to go all in on We Buy. People gotta eat right, and we love poor quality food and a buggy app.
Well, that's fantastic. A really smart decision, young man. We can put that check and it's gone.
Welcome everybody to the Laughing Stock. Johnny, how you doing today?
I'm doing good, and yourself?
Good. Good weekend.
It's the weekend finally, and it has been a little bit of a slower weekend. No, I mean a week, right?
Yeah, I guess in comparison to the craziness of last week. Yeah.
BNED still down a lot on Friday. I think it ended 40% down. And you know, we keep talking about BNED, but it has just evolved into something completely different than what we initially had, right?
Yeah. Pretty rough volume at the end of the day there. Actually, I didn't even notice that. Wow.
Yeah. And I think on Thursday, I also saw that it was almost around a zero for the day then, and then the last 6 minutes or something, it went up 5%. So there's a lot of things going on in the end of the day in BNED right now, and what a roller coaster it has been last, what is it, 2-3 weeks?
Since May 16th, it was down to 18 cents, and that was the last point it was that low.
Yeah.
But, similar to what you and I have said, we're getting into June now, and that rights offering is coming. So,
yeah.
And I don't know what the short interest is. I imagine the shorts are out, but
yeah.
Which I will say going forward, I'm gonna, anytime there's a huge short interest take on a stock, it's definitely worth looking into, because man, the meme army comes in and can really put some damage down.
Yeah.
You know.
Yeah, but do you think this would have happened without the tweets from RK?
For BNED, I actually think it was more related to the Greenhaven type deal, and then don't get me wrong, the meme stuff did help, and GME had a relationship with Barnes and Nobles in the past, so
yeah,
I don't know how. Yeah, I don't know how much that correlation actually even mattered, but it just kind of connected the names, and you started to see a lot of interest come into it. And then, you get a bunch of GME traders looking at BNED, and someone says like, "Hey, the short interest on this just skyrocketed." Like, that's game over.
Yeah.
No pun intended. But
And what about this We Buy? What do you think about We Buy?
It's one of those stocks that because it's Chinese, right?
Yeah, I think it's based in Singapore.
Yeah, so actually, I kind of like the idea of the company. Now, obviously, it's not going well, but it was apparently it's supposed to be like kind of like an Amazon type idea, except it's like you
Yeah.
buy in bulk for like a community. So I'm not really sure how it works, but I could imagine this kind of working like if you were in like a neighborhood and everybody just did one gigantic order and like it like came to your neighborhood and like everybody just went and got their stuff and it saved on like a ton of like shipping and all that and everyone everyone got the benefit of being cheaper. It's not like a bad idea. It's kind of like a crazy version of Amazon or something. But obviously it's not working out quite as everyone had hoped. So
No.
we'll see. We'll see where it goes from there.
Yeah. I read a little bit about it, and it seems like they have a very competent management team and people with experience. But I don't know this company at all, so just a ticket to have in the intro video.
Yeah. Honestly though, you see that big of a pullback, probably interesting to take a position here, right?
Could be.
Let's pull this up here. See, you would have bought at the bottom. You're already up 5%.
Yeah.
But
I think sometimes these intro videos have actually ended up working out in the end so far, I think.
Yeah, I mean,
Just
you
a
can't
few
count
of them.
anything out.
No.
I will say though, look at the 52-week range. Like someone bought this at $14.
Yeah.
So, but this is a really young company too. I mean, there's not much to go off here.
No. And it's not like we haven't seen that happen before in young companies.
Yeah, and market cap took a nosedive here.
Yeah.
So, either way, I mean, that's why we always, warn people, even with like BNED, for instance, that, just be careful, like, investing in these things too high up because they can fall apart quick.
Yeah. Oh yeah, we see at least for me in my daily movers and stuff, there's almost every day a big drop and a big gain in something.
Looks like marijuana's down a little bit. Yeah, I don't know. There, like you said, there wasn't too much. Transocean. What's this chart doing?
Yeah.
Looks pretty good actually.
Yeah. It's on the rise at least.
I haven't looked at rig in a while, but interesting nonetheless.
Yeah.
Yeah, guys, so I like I said last week, I wanted to show you. So this is the updated portfolio. So I'm somewhere around just shy of 70 stocks for this week. I mean, some of the names are the same that they've been. I haven't been like selling out of stuff like super quick or anything like that, but I've been testing a lot of things this past week, past 2 weeks, I should say, really. And the portfolio, granted, it was a good week for value. I kind of put that into the thing, and a lot of my stuff tends to be more value, small cap type stuff. But it's up 1% for the week. So I mean, like the goal, like I said, is just to kind of keep trudging along in that direction. So I'm sure there'll be ups and downs. So I mean, 1% on 1 week is great, but who cares? Doesn't mean anything. But the goal is to prove to you that this keeps continuing to slowly creep up. So. We'll know basically like that I started doing this. This is based off my money in this account for the end of May essentially. So we'll see what like the month of June, for instance, brings, and then we'll go from there.
Yeah. Yeah, good start though.
What's up?
No, that's a good start though in a week.
Yeah, and to be honest, I was playing around with some stuff, so I sold some stuff for losses, and just not on like I wouldn't do that going forward. It's just me more playing around with some things. So hopefully that number can continue to creep up a little bit higher because the goals, like I said, even though the goal is 50%, it's also up to 100. So we can shoot for 100 too.
Yeah.
Totally reasonable. Super easy to do, as everyone can tell.
Yeah.
And the other thing too that Johnny and I were talking before the stream too is as I hone in more on some of these things, I probably will shrink down the amount of stocks in the portfolio. But right now, like I said, I was just trying to try a bunch of different things and get different stuff into the portfolio. So yeah, it has ballooned out into a lot of different positions, but I'm hoping to be able to shrink these down into, and when I say shrink down the number of stocks, but increase the size of them. So hopefully the winners are going to be better screened for and lead to bigger results. So we'll see. But yeah. I'm pretty happy. The only one I was telling him about before too is Sci-Fi or SNCY, however you say it. I should know the name, but I don't. Technology was down, and that was just on a big miss. So it's kind of whatever. But even though it's down that much for the day, I had only bought this just before, so my position's actually only down like 10%. So the goal, but that's like we were saying, we're trying to work on our timing. You know, a couple of other things are up in general. Things are moving well. It's annoying, these ones that Excel fails to find the information on, because I have it in my portfolio, but I don't have it in here, which is kind of annoying that Excel sometimes doesn't recognize the ticker. Because like these are, I don't know, some of these are names that I'm always surprised it doesn't recognize, like Gladfelter, HBK is another one that it should recognize, but it doesn't. So it's whatever. And then I got a good list of tickers. Sorry, what were we saying?
Oh, I was gonna say, what the hell, Bill Gates? Fix this, please.
Yeah, I know. Seriously, he's been slacking lately.
Yeah.
I don't know what he's focused on. AI or something, but he's not doing a good job here.
No.
What else? Anything else that I need to go over in here? No, I don't think so. If anyone is tuning in and watching and you guys want to have me go over any of my tickers or anything like that, let me know. I didn't screen from Friday yet, but I have a bunch of stuff already in my spreadsheet. So, not being Cardlytics. Oh, did this not update? Oh, I thought it updated. I mean, whatever. Did any of these update? Okay, some of them did. I don't know why I didn't do that one ticker. Okay, they were updated. Okay, I was gonna say I thought I updated this, but not a big deal. I'll just have to manually do this one. But yeah. What do you want to do? You want to dive into tickers, or I mean, we can start looking at some of the charts and stuff like that, just to see if anything stands out.
Yeah, we can do like the tickers, I think.
There it goes. All right. And Upland's already in the in my it's a software company. It's already in my portfolio, so I'm more just pulling this up just to keep an eye on some things here. Let's just take a peek at the chart real fast. So you can see there's a huge spike at the start of May, and it's kind of been bouncing around. I'm trying to think
Then
when I bought it. What's up?
No, we have a message in the chat from Resius. He says, I did a stupid move and bought BNED at 75 cents. How bad will it continue to be?
Well, Resius, I mean, it's kind of hard to say. I mean, like I said, I think you have a few more days until the what do you call it? The rights offering. So it could still bounce one more time. I don't want to rule that out. If we just pull up the chart for BNED real quick, I mean, in general, sure, it's starting to trend back down, but it's still the overall trend is up. So I don't know, if I was you and there's any kind of pops anymore, you might want to just start to sell on some of those peaks. I mean, this is not financial advice, but if I was in your position, that's probably how I would handle it. And this is why, you know, we don't encourage anybody when something like this has already popped. You know, this is, to me, it gets a little bit late. You know, after this initial big pop here too, on a day like this where it pulls back, this would be where I'd be willing to take a position if I didn't get in somewhere in here. My goal is always to try and find stuff down here. And then if I miss this, or even like another big pullback here, you could get somewhere in there. But once you get up to this, where it's been like, you know, way up, way down, way up, way up, down, down, you know, like, to me at that point, it's really tough to say. And it's not like you're going on any specific news. It's more just trading and kind of general consensus on the stock. And I think a lot of people got excited about BNED and didn't really understand the company in terms of the rights offering and what was actually going on in the background. And that's why I think trading to a lot of people seems so difficult, is because if you don't include the fundamentals and the narrative going on, you're just kind of blindly shooting on a chart, which, don't get me wrong, I'm not saying that I use charts all the time. I think charts are great. Probably one of the very few fundamental analysts that actually like the chart. And Johnny and I have said that's like our edge, I feel like, is the fact that we use the charts, you know, and we just got that from RK. It's not like we came up with that. We always just thought it was kind of funny that people only stick to one school of thought and don't want to, you know, use both ideas. But, you know, if you're going to get in on the just by using a chart and you don't understand in the background, like, you know, imagine if you had been using the chart and you were in here and you didn't realize like the risk of things going on in this part. Like, you could have missed this and got this huge gap down, which would make you take a serious hit. Now, don't get me wrong, from fundamental approach, me and him obviously mistimed it as well. And if I would have been following the charts better, which is also something I've taken into consideration now, it wouldn't have told me to even be in on this. So I would not have been in here, and I would have just been fine. Actually, the only time my charts would have helped me to get in is probably on this climb up here, which would have been essentially a double. And then I wouldn't have bought in again until somewhere in this crazy mix. So there's a bunch of different things to think about. But as always, Rizius, you know, and if it helps, just think about it as in, you know, it's not the end of the world. It's a mistake that you made. And even if you have to sell out on that as a loss, or if you want to continue as a bag holder, just bag holding's tough on this one because of the rights offering. So the dilution is going to be insane on this one. So, you know, offering 2.6 billion shares is rough for any shareholder who doesn't have the rights offering. So, you know, sometimes you just have to take the loss and then in retrospect realize like what you did wrong. Like, you know, I just hopped in on something that I shouldn't have. And it's okay. We all do it. All of us have made that mistake, Rizius. And I'm going to make it again and again, I'm sure. Because there's so many times I do something and I'm like, I'm an idiot. Why did I just do that? But it's whatever. You just try and keep getting better from making those mistakes. And that's also why I focused on kind of spreading out my position sizing, where, you know, when you look at my portfolio now, and now I have, you know, like 60 or so stocks, like I said, if this is down, I'm only down 10%. So this was a 1% position when I bought, and I'm only down 10% on a 1% position. Like, I don't really care. Like, that, to me, yeah, it sucks it's down, but like, it's not the end of the world. Like, it's not going to kill me. And it's just something to think about going in the future. And that's the other thing too with the stock market. It's unpredictable. If you're trying to time stuff, like, you know, we're fundamental analysts, but we're trying to get extra results by timing certain things to the best of our ability. And you're going to make mistakes doing that because that's an imperfect science. There's no way to really be perfect at that. So you have to hedge your bets on things, you know? I don't know if you got anything else you want to add, Johnny. I feel like I'm just rambling here.
No, but you know, we also made mistakes in BNED, and even though they came at a bit of a different time, this is it's just proof that you know, it stings. It was big positions for us, and it still stings, and it's very annoying for me. And it's going to take a while for me to even get that money back, you know. But I think the main point is to continue and try to improve, like you are saying, and look at what you did. If this doesn't end up the way you thought it would be, Rizius, maybe look at the stuff you did and try to, as quickly as you can, like, analyze it and learn from it. We have definitely moved on. Trying to talk about on the stream our mistakes, and also adapted and changed the styles a bit. So you know, it is what it is. You're never going to be investing for a long time without doing mistakes. So that's how it is, I think.
Yeah, and another thing too that I've been working on specifically is you know, I put so much emphasis on when something works out, paying attention to what was good about it and what made sense. Like when I looked at something, you know, and I saw insider buying and it was a good timing of things, or you know, the numbers looked good on a historical thing, and to me I thought it looked cyclically low and I started to time it well. Like those are all good things that you timed right, but also too with your mistakes. When you make a mistake, well, like what did you look at that you thought looked good that you were wrong on? And focusing on when something looks good but it's actually not. Like I think that's a really important step to take in your investing career to get better at things. And whether you're an investor or a trader, because very different styles, but essentially you're trying to do the same thing. You know, you're just trying to get outsized returns, essentially using some form of strategy. Which is why I like I said, I'm trying to use both. I don't think there's any reason that you can't use both as your confirmation. And I think if the charts are telling you to buy, and fundamentally and narrative wise, everything looks good to me, and especially if I think it's a value stock, now you have my attention.
Yeah. He's saying, I expect to make some loss since I got in too late, but the sudden drop was just surprising, really. Yeah.
Yeah.
And
you can't predict when someone pulls the rug out.
Yeah. Dayne and I, we were in BNED when it, what was it, Dayne? 62% down in a day?
Yeah, well, I mean, and we had talked about what that risk was. We knew it was a binary situation. It was either going to work out and there was going to be a sale, or there wasn't. So
yeah, so it wasn't like it was surprising that it happened, but it's just painful when you are in this. And I was gonna say, like, you talked a little bit about the timing earlier, and you know, you can sit and argue and analyzing something that you're gonna end up being right on. Your timing was just wrong. So that's also it just becomes more and more important, the timing here, you know, both for exit and entry positions.
Yeah, and timing is one of the toughest things, which is why I rarely play with options, because adding a time factor in that could essentially lead to zero is super dangerous. So I have to have a really clear catalyst nowadays, especially for me to even play with options, because otherwise there's just no reason to take that risk on, because the loss of capital is too high versus, don't get me wrong, there's great upside. And that's why if I'm really confident on the upside, I would look at options. But otherwise, I stick to just buying stocks now. And I typically stick long. I don't really short things, just because of the same thing. You can be wrong and get shorted for some reason on something that you shouldn't have. Or for instance, like, you know, I'm sure someone saw BNED, understood the rights offering, and took a huge short position on it, and didn't realize that, you know, a bunch of people are going to come in and buy the stock at that point. You can't predict that. So it's trying to eliminate things you can't predict. I feel like that's a really important concept.
Yeah. But in terms of how bad it will continue to be, it's impossible for us to sit and answer for it. It has turned into a little bit of a different play, but as Dayne said, the rights offering is very close now, and that's, you know, that's real. They're going to dilute the shit out of this company, essentially, right?
Yeah, and you know, Rizius, even if you're just looking at kind of straight technicals on this, this is 1 year daily. Yeah, we'll stick with that. You know, if you're looking at technicals on this, so we got over bought at a certain point here, and it's been trending downwards now on like RSI, for instance. Volume's way low compared to what it was on this peak, and it's pretty rare after you see that kind of spike in volume that you'll get that again. And the other thing too is when you're trying to evaluate something, you got to think of it just like an option. If the expiration date is coming in sometime in June, each day that we get a little bit closer to that expiration date, the chance of something going, you know, hyperbolic in one direction shrinks more and more. So the fact that the bullish narrative of, you know, someone coming in to buy BNED, like the Greenhaven deal or the rights offering getting canceled, each day you get closer to that rights offering, that percentage chance of it happening goes down, which means the optionality of it benefiting in a bullish way goes down. So what I would imagine is this will continue to trickle down. Now, will you still have these up and down days? Yes, which is why if I was you, like I said, I'd probably just hope there's an up day. And if not, I would still probably just start trimming the position over time and just take some of the loss. Like, just like I said, like, and then in hindsight, go back and figure out, was I confident when I was buying? What were you buying on? What did you use to buy? Did you just think I want to buy this even though it's up and because you're trying to catch it just on luck? Because that's how a lot of people get burnt, is they're just shooting for something that they think is going to be lucky in their favor. And don't get me wrong, there's got to be some asshole who bought here at 18 cents and just got lucky and wrote it up and actually sold it like $1.30. Someone did that perfectly and has no clue what they're doing, and good for them. But like, just don't like me. I am so unlucky. I'm not a lucky person. So I'm not trying to rely on that kind of thing, because what I would buy is at $1.30 and sell at 18. So I try and hedge my bets by not taking that risk on, because I'm just not fortunate like that, and it's not going to happen for me. Maybe 1 out of 100, but I've already lost 99% of my money then. So it doesn't help me very much.
No. But I think we can say, Dane, that moving forward, BNED is still on our radar. They have, with this dilution, they're going to fix their balance sheet, and it does look promising. And we need to just see what happens and where it stabilizes a bit. And after, they're going to do a reverse split, most likely, and then it's still on my list to track. So, but that's a little bit of a different play, though. Than just trading it.
Yeah, and that one's going to definitely take some time. So, after the reverse split, we'll see where the stock price lands. And when I say that, I'm just saying, not that price is value, but in terms of like where I would enter on a margin of safety basis. If the price lands low to me based on what I think like earnings per share is going to be, that's where it would start to interest me. I typically look at, I look at a mix of book value and free cash flow, typically a little bit on earnings, but earnings can be distorted so easily. So I don't always hold that into too much. I don't weigh it too much, because you can sell shares or take debt on and it makes your earnings look good. You know what I mean? So it's kind of like a BS number to use. But if cash flow continues to increase and, say they're slowing down CapEx expenditures in the business and free cash flow starts to really increase, that interests me, because that's where you start to see something turn around and it goes from, looking expensive to really cheap. But thank you for your question. I hope you got something from that.
Yeah, and let us know how your how it's going, Ricius. We are, we are well familiar with BNED now, and we love to discuss the what's going on.
Yeah, and I'll still be. I'm still bullish on BNED, just like Johnny said. Just we're gonna have to wait for that reverse split. What else we got going on here? With Upland, what size position is this for me? Or did they break? Oh, I might not still have them. I thought I had them. Maybe they're just getting close to being interesting. I've owned them in the past. That's why I couldn't tell if I had bought them in this last when I expanded the portfolio out. But I do get that it's relatively cheap here. Book value's been getting hit. They've been getting crushed on earnings this past few years. They still generate decent cash flow, but obviously that's not turning into anything. And it's kind of strange that they're doing these share buybacks here. It looks like that money could definitely be used better elsewhere. They're sitting on a good amount of cash. I will say, they went from a $100 million loss in EBITDA to a $50 million loss in EBITDA. So it's slowly trending, but if you just even look at actual earnings, it's always been negative on these guys. So you're thinking that this company needs like really a true turnaround to actually get anywhere. You know, most people are saying sell right now.
I don't know, Dayne. I kind of like the stock. I've also had it in the tracker for a while, I think.
Yeah, it's just crazy how much they're missing like guidance. You know, like, you know, analysts are assuming they're going to be down like $1, and instead they're down almost just over $3. You know, revenue's growing, but like not by much. It's not really doing anything.
%14 insider ownership, though. You can check who owns them.
You know, Wall Street says buy, but the numbers look terrible. I just want to see what the comments are saying. See if anyone has anything to add to this. So there's 26 large new customers. They were purchasing stock, which, like I said, I guess because the stock's cheap, maybe that's why they're thinking that's worthwhile. And don't get me wrong, obviously repurchasing stock's not a bad thing, but if you're not generating cash, like it's arguable whether that makes a lot of sense. Operating losses were 7.3 million, which was the second worst result in the last 9 quarters. You know, Cloud99, who never said anything before, his only comment is on this, and he's just saying that AI could come in here.
Nice.
You know, Charlie Munger's saying, you know, EBITDA's shit earnings, which, like I said, EBITDA can be, you know, it doesn't really mean all that much. But don't get me wrong, if it's positive and that's all you got to go off of. But, like, even here, EBITDA's even negative. So it doesn't really mean much anyways. You know, if you got negative EBITDA, because this is the thing, like I said, they have had positive EBITDA before, but in terms of their actual earnings, it's always been negative. And it's, I mean, just look at these last 4 years. It's $16 lost in book value. And on average, they're losing $3 a year in you know, book value. So it's a little rough here.
And I don't know, like if you also look at the acquisitions, they've been in growth mode, I guess, and been just acquiring stuff every year. But now the last 2 years, they probably haven't had that focus because they. Is your data set showing some acquisitions the last 2 years?
Yeah, I got some pretty big acquisitions all the way going back to like 2018-ish.
Yeah, but nothing in 23 and 24 or what?
Yeah, not this last year.
Yeah. But could come, I guess.
Makes me kind of nervous too. So they're buying these whatever they're acquiring here, and that's not helping at all.
No, it hasn't.
I just want to see what the debts do. You know, and just to like look at this chart here, you know, now like in terms of my valuation, I get that I don't know, $2. This could be worth $7 if it wasn't trading in the gutter. But that would be like a full turnaround story. So, you know, that's a super unlikely amount. That's even higher than 52-week high. So, It does become interesting more around the $2 range. Don't get me wrong. You know, $1.90 was the 52-week low. But yeah, we'll see. I mean, you know, that's why I'm saying, like, you know, this is why I think it's important to have the fundamentals alongside. Because, like, if you look at this chart here, you could think on some of these breakouts that this looks good. But at the same time, too, like, fundamentally, it's not looking good. So typically these trends are slowly downwards. And I'm sure if you looked at a like a 5-year weekly, yeah. Now, I mean, now you can clearly see what the actual trend is here. Now, don't get me wrong. As we've gotten down below, like, $5, you're starting to watch people, you know, it's not dead yet, and they have cash, they have time until the debt's due, I'm sure. So this one will continue to kind of bounce around, and you can get lucky on some of these kind of things. I think that's why Johnny and I look down here. You know, we're kind of looking at all these distressed things and seeing what could potentially turn around.
Yeah.
Just trying to find. So they got till 2026.
For debt?
Yeah.
Yeah.
So same idea as before when I was talking about, you know, optionality is something is, you know, this is probably going to bounce around. It's going to continue to trend downwards, but slower. And we got really 2 years for them to kind of solve whatever they can, either that or refinance. But it's a tough market right now to refinance, especially when you're burning through cash without diluting shareholders. You know, my leverage calculator warns me that this is leveraged, and if we had to do a full deleverage, you know, you could argue this could get down to value wise, like my margin of safety is telling me around $1. Would be a safe entry point if this starts to get closer to fully diluted. That's something I was going to tell you about, Johnny. I've been thinking about it because you know, it gives me different amounts based on cash flow versus you know, assets is kind of the way I measure the two. And I feel like as I get closer to when the debt's going to become due, I'm going to put on a more harsh multiple, like the 65 million shares here that it's recommending. Versus where, like, if it's like 2 years out, I'm more willing to kind of go with this and use these as my numbers.
Yeah.
Granted, and if anyone in here hasn't seen, it's not like these numbers here are like any kind of real value. It's just some dumb metrics and stuff that I've worked on and some general pricing that I've come up with. So, you know, these aren't like live and die by numbers. It's more just to give me an idea. I mean, hell, you could just look at book value here. And you're going to see negative tangible, but it's a software company. So that doesn't really mean much to me for this kind of company. But, you know, on a leveraged basis, this is telling me 360. So if you wanted to argue on a book value, but the problem is like I said, earnings is constantly negative here. So book value is going to continue to trickle down. You got anything else to add, Johnny, on this one?
No, not really. I think you covered it's a bit like it's a bit easier maybe here to be tricked a little bit about the cash generation they have. It looks a bit attractive on those, but then you see like the risk we talked about with the acquisitions and stuff like that. It hasn't been helping the company. Okay, revenue is up yearly here, but the rest of the stuff are pretty much stagnated or down, and this last year looks even more terrible for them. So it has a few things that catches the eye, you know, and then the rest I think is enough for me to stay away from them for now, at least. But there were some things on the chart that I kind of liked, but I think I'm just going to keep tracking them.
Yeah, and you can even see, you know, they acquired some of these companies, but maybe it'd be worth maybe reversing some of those sales, trying to get some money back from them, and see where that they can help in margins, because the margins haven't really improved all that much since they've taken on those acquisitions. Some of them, but not like you would hope.
No.
And turnover's slowed down quite a bit, which means they're getting less and less people interested in their software. And this is another thing, too. They're selling business software. I mean, that's a super competitive environment. So I imagine their moat gets eaten alive pretty often.
Yeah.
Actually, what I'm going to do, because Johnny had given me some tickers, so let's bounce over to those ones just so we can kind of get caught up on some of those ones.
I think maybe you did one of them on a recent stream. I did them on Thursday, but there was a few things that I I thought we should look at it today, you know.
Yeah, I mean, iHeart's another one that's, super leveraged. I'm sure most people, at least in the States, know what iHeart Media is. It's all radio type things. They get sponsorships, advertisements. It's mostly digital podcasting. They have iHeart Radio, which is a digital service. They do. I think they host like concerts, all that kind of stuff. So there's a mix of things that they do. But this is another one that's really kind of failing to translate from. I will say its simple free cash flow in the past year or so is really impressive.
Yeah, that's the thing that I found a bit hard to get past on Thursday when I looked at them, because look at the depth and everything here. It's a big amount, and some of the articles are talking about that I like they are struggling, because of the depth, and that this is a very real issue. But then you see the free cash flow and operating cash flow as well. It's like it's not bad. It's a bit hard to just ignore when it trades at below $1 right now.
Yeah, how much is this? Not much is operating. I was gonna say how much is operating leases, but not much, because I'm thinking studios and stuff like that. But most of this is actual long-term debt, so it's
But I think it's spread out. What was it, like 26, 27, 28?
Yep. So I mean, they do have time to work on these and get them moved around. But you think how much they're paying in interest on this? It's got to be a lot.
Yeah, and that's where it clashes a bit maybe on the attractive cash generation. But at the same time, if you look at their history, they have paid down the debt, regularly. They don't seem to struggle too much on that route. But it's hard to get through. It's hard to get past this high amount of debt as well.
Yeah, it is a lot of debt. So I don't know what they do to really turn that around. I mean, they definitely have a lot of assets and stuff they can sell, and this last year has been really rough for them though.
Yeah.
Lost almost $1 billion in earnings.
Yeah.
And shareholders are slowly getting diluted here too.
But then again, election year and all that stuff that we have been talking with, a lot of the broadcasters come up now in the screener, and that's a factor for all of them, like a near-term catalyst to maybe get some ad revenue and whatnot. But
Stone Fox Capital gives a strong buy on April 17th.
Yeah, so I think I saw that on Thursday. I was also saying there were some points in some of the articles that the CEO has been buying, and yes, he has been buying on the open market and for a decent amount as well. But those are poor purchases right now, because he buys at like $3, $3.50, and then $2. So he's down on his buy. So then, how much should you take that into consideration? Then just seeing him buying is maybe not the best catalyst here, when he's down almost, what is it? He's down a lot since those purchases.
I will say though, the big narrative change right here looks like that the stock's going to benefit from like you said, being a political year here in the States, you know, he points out on his comment yesterday, you know, that Trump raised $35 million yesterday should provide a huge boost to ad revenues on iHeart. And what they're saying, obviously, is that money that Trump's raising is to keep getting, you know, his name out there and spend. That's how political advertisements all work. You know, you're just trying to get your name out there more than the next guy. And how much that actually goes to a company like this is it's hard to say, but anything will help here. And if they intend to improve off any kind of benefit in terms of what they're generating, you could see the stock bounce a little bit on that. Do I think this one's got a huge room to bounce? That's a little tougher to say.
Yeah.
I mean, and we are quite a bit down. I mean, from that guy's recommended strong buy, it's down 50%. So
Yeah, and because they had a recent drop now, and you know, and is this the one where he had like multiple articles where he? Yeah, if you look at the history of Stone Fox Capital on this Dayne, he has a strong buy in all these years, and you know, none of them has been correct so far. So that's another thing to keep in mind.
don't panic on March 11th, 2023. Wow.
Exactly. So
Where do you panic when you're down 90%?
yeah.
Holy smokes.
When should you panic then?
Yeah, somewhere in there you panic.
I saw this on Thursday, and then I kind of, you know, I'm not saying that you're not allowed to be wrong or anything like that. Of course you are, but his history has always been a buy, and maybe then you should be a bit more careful to listen to everything he said in his most recent article.
Yeah.
But I mean, it's what do you have for free cash flow per share? I get one and 9 cents in the last year.
I get $1.71, so not.
Oh yeah, even better.
Not bad, but if you account for the large amount of debt that's going to come due, and you had to deal with dilution or anything like that, it would be like 5 cents a share.
Yeah.
So.
Yeah, I have also a very small amount there, and they have also diluted a little bit, you know, every second year or something.
Yeah.
But yeah, I found it interesting because the cash generation, but I kind of concluded with it's too big of a risk right now.
Yeah, I just want to see if I can figure out anything else going on with it, because I think it looks pretty rough right here. I think we would need a big turnaround in this one, to be honest.
Yeah.
So yeah, I'm gonna kind of keep it where it's at. And the other thing too is I just don't see much upside here. Like of all my evaluation calculators, the highest I get it should be worth right now is at $1. You know, so there's only really like a 10% upside for me here that I would see, anyways.
Yeah.
You know, if you were able to buy on the next like low or something like that, maybe. But this one's tough even for me. And I'll pretty much
and also at this stage of where I am right now, I kind of want to avoid a little bit of a more risky place like this one. Just because I see other stuff that I believe in more, but I'm not saying that this won't work out, though. It could.
Well, if it goes up 90% and Stone Fox makes his money back, good for him.
Yeah.
Although I say go up 90%, it's going to have to go up like 500% to get his money back.
Yeah.
I feel like I just went over CABO.
Oh, have you?
Yeah, now I'm thinking about it.
Yeah. Yeah. We can skip it then. There's some insider there, though.
Yeah, I think last time I just didn't see much. I mean, like you said, a lot of these are telecommunication type things where look good. I mean, I'll tell you off the chart, I like the stock. So
Yeah.
That insider is not bad. I mean, this dividend is crazy.
Yeah,
Granted, it's $400 a share. It's not cheap, but
no, I saw the price. It's a huge price. Do you have a pretty big asset sale this year?
No, I don't.
You don't? I have like. Oh, sorry, it's not that big though. The share count is not high here. 6 million.
Yeah, which is why that's just why the stock price is so high.
Yeah.
Once again, a lot of debt. They are slowly paying that debt down over the past 2 years, but not much. They haven't diluted shareholders, which I'm happy with.
Yeah.
And unlike the last two companies, this generates earnings. So this is a real deal. Which, it's also reeling. I mean, they spent $2 billion on this acquisition in 2022. So
yeah. Oh yeah, there you have a big one.
So I don't know if that's panning out for whatever. I don't know what they bought. I mean, book value looks good. Numbers look great. I don't know. This one doesn't look. This doesn't look bad to me, actually. I'm curious on just the narrative here.
I think I might add this to my tracker sheet, but the question will of course be, what do you see as an upside here? Because
I mean, I see this could get up to. It's hard to say. I mean, it's been at 750 within a 52 weeks.
Yeah,
it'd be a double from here, so I wouldn't count it out.
Oh, and of course, don't forget the dividend as well. I'm not sure. There's so many of these types of companies now that you kind of, well, you can of course add them all, but they seem also, Dayne, there's a 20% short interest in this one.
Yeah, I mean, there's, he's talking in terms of risks that it's a highly competitive marketplace. You got to stay ahead of your competitors. You don't want customers switching off to different people and whatnot, so. He says he thinks it could be trading as close to $792 per share. When did he write this? August? Is that what I said?
But that's not far away from the 52-week high.
Yeah, but this last year's been kind of rough on the stock, so
yeah.
I don't know. This is one of the things I've been trying to do too. Is okay. What's changed over the past? Let's pull up like a 3-year chart real quick. So we're just down from 2,000.
Yeah.
Let's pull up a 5-year chart. That'll be a little easier. Okay. So on the 5-year chart, we'll say between 2021 and 22, things looked pretty good, and from there it's been declining. So if we look at the fundamentals, and we'll go back to 19 because really you got to think mine's trailing 12 months, so it was more around that time. Had a really good year in 2021. Book value stayed up. Now they took on a ton of debt with that acquisition. I got to look more into that acquisition and see what that was and if that was worth taking on all that interest, because that interest there has not helped anything. But book value continues to climb. Even tangible book value, which is part of that, is a big part of that's got to be the goodwill from the purchase, is going down. So they are working in the right direction.
Yeah, and they've also minimized their operating expense, and capex is also down. So yeah, and they have some cash. Have a decent amount of cash.
I mean, if they can get this debt down, I don't think this looks bad.
Yeah.
What else is going on with the insiders here? Reitz Wallace is the only guy, and he spent almost $500,000.
But they do own 10%. I will check the D-filing now.
The what?
The SEC, the DEF 14A.
Oh, yeah. I mean, I'm not worried with a company that generates earnings like this. The debt's probably fine. Like, they're going to be able to restructure.
Yeah.
Most of the companies we're looking at are so ugly. Like, they're not going to be able to restructure. So when I see one that actually has like a balance sheet that doesn't look, totally in the guts, looks like they'll be able to sneak fine through all this. So they have a revolver that finishes on 25. Another loan in 27, another loan in 28. So over the next few years, do they have it all listed out? I mean, they really don't pay a ton out in interest. The first chunk that's due is in 2026, which they should be able to handle that fine. And then it looks like 2028 is the next time that they have to deal with it. So they have plenty of time. I don't know. This one down here looks kind of interesting to me.
Yeah, because it's close to the 52-week low as well. I just saw the owners. There's a guy called Donald E. Graham who was formerly the publisher of the Washington Post and later was the lead independent director of Facebook's board of directors. He owns 8.5%.
Gotcha. That's not too shabby.
Yeah.
All right.
I'm adding this to my tracker sheet.
Yeah, I want to see. I had this on deck, and I definitely think that's worth keeping it there. So I'm just going to update mine as well.
I must say I've added a few of these broadcaster companies lately.
Yeah. I mean, this one's more about the actual cables themselves than straight up broadcasting, but
yeah.
But if this finds some actual resistance, this one's kind of interesting. I mean, we've fallen a long ways here, though.
Yeah, it has taken some hits.
I mean, it's kind of crazy. This is where it started trading in 16. It's back down at these numbers.
Yeah. Oh yeah. New territory.
I mean, book value is up 5 times. Earnings are way up. Cash flows up. What was there? Is it really just the debt that's brought them that much down? Is that the only thing that's actually really changed all that much? That seems crazy to me. I mean, don't get me wrong, there is some leverage here, but I think I'm gonna add it to my watch list actually right now.
Yeah.
Just to try and keep a little closer of an eye on it. I'm not saying I'm going to take a position, but just my watch list is a much more coned down version of my on deck list, so it's sometimes a little easier just to look at those ones. Or helps me keep an eye on some of the ones that I think are close to looking good. All right, I got SNCY next. Do you want to do them?
Yep.
All right, so this one's a little younger. Sun County Airline Holdings operates Sun County Airlines, a hybrid low-cost carrier that deploys shared resources across its scheduled service, charter, and cargo business, focused on serving leisure and visiting friends and relatives, charter customers, blah, blah, blah. Service to Amazon with flights throughout the United States and to destinations in Canada, Mexico, Central America, and the Caribbean. Its passenger segment consists of 2 businesses, scheduled service and charter. It flies a single-family fleet of mid-life Boeing 737 aircraft, 60 Boeing aircraft. It includes 42 aircraft in the passenger fleet, 12 cargo operated, and 6 aircraft that are on lease to unaffiliated airlines. So, looks like they're, I mean, yeah, I feel like if you're spreading out all your stuff to even other businesses, that looks kind of good.
Yeah.
I think I get upside here around $13, $14. I don't know what you get.
Yeah, I'm not trusting my calculator, but looking at the fundamental numbers, I don't think that's unreasonable. It does trade close. 922 is the 52-week low here. There's no insiders involved. I think there's a lot of sales.
Share count's down.
Smaller ones. Huh?
I said the share count's down.
Yeah, pretty big too.
Sorry, just trying to close out of some of these things. Got so many things going on here. We got all buy strongs since 2023.
Well.
And we're down significantly from there too.
Yeah.
And I mean, they missed earnings, but only by 4 cents on a 66-cent EPS. So really, not bad.
No.
They're saying airfares keep falling, so
It's an airline though. I'm not used to. I kind of stayed away from them a bit.
yeah, I do get sometimes interested in some of the cheaper airlines where they're more like, budget friendly ones,
Yeah. Do you know this one though?
I've heard of them. I don't think I've ever flown on them.
Yeah.
Oops, that's not what I wanted to do. I mean, it's young. It's hard to say how accurate this data is going forward. You know what I mean?
Yeah, for sure. Yeah, I even have some messed up numbers here and there because of the lack of, years.
Yeah, it looks like their liquidity's dropped quite a bit. Earnings have stayed pretty stable, though, it looks like the past few years.
Yeah. Debt is up, total debt, short term as well.
Yeah, right.
But I think they will survive those. Isn't it a bit like that in all the airlines? They are like all the time struggling to pretty much survive barely.
Yeah, because it's tough because it's not like there's much to save on for airlines.
Yeah.
And
I saw a comment.
What's up?
I saw a comment saying that this company was like the price was what is it saying? Stock price is tied too much to oil as well as other airlines. Electric might be a better future.
Yeah, I saw the same thing, and that's probably pretty true.
Yeah.
I'm gonna say cyclical, too young. Just kind of needs more.
Yeah, it does need more.
Yeah, I mean, I don't think it's like underpriced or anything, or like overpriced even for that matter. Like it seems okay.
Yeah. I mean, if you look at the book value also, just pure book value, it's around there, right?
Yeah, I get
right now.
Yeah. I mean, it's trading right just over book for me.
Yeah, same.
They've kept margins okay. I mean, they're definitely losing cash though. That's one thing that starts to concern me here.
But we are also entering the summer.
True. Just trying to decide if I want to put it on deck or not.
Yeah, I think I'll skip this one. But the share count being down too, that's a bit interesting here.
Yeah, I mean, I don't think it looks too bad.
No.
It's got a ways to go on just like looking at the chart and stuff. Like, I wonder if it's even worth a look at the moment. Yeah,
so,
I think I'm gonna leave it at that. I'm just gonna. It needs more. I just don't have enough here.
Yeah. Want to do Caesar next? Because Carl Icahn has got involved there, I think.
Yeah, let's do Caesar here. Caesar Entertainment. It's a gaming and hospitality company. Operates through the segments in Las Vegas, regional. I guess that's smaller places. Caesar's digital and managed and branded. In addition to corporate and other, has some hotels and casinos. Stuff all over the place, to be honest. Has a few resorts. I don't know. It's casinos and gambling, essentially.
Yeah.
It has a digital presence now. Now revenues are quite a bit up. There's a good amount of insider. Market cap's pretty high for me. You agree?
Yeah, it is high. Yeah. Yeah, usually I didn't know. I just checked briefly just before the stream this one, and I think I saw some comments about Carl Icahn taking a position now. But what caught my eye was the fairly big amount of insider here.
Yeah, and whoever they acquired must have had a ridiculous amount of debt or something, because their debt skyrockets after that acquisition.
Yeah, I saw that. and the share count jumped drastically too. I don't know. I didn't look into that.
Well, they must have sold the shares and then bought whatever company they bought, but that company must have had a ton of debt already on its books, because there's no way you get 26 billion. I mean, they have $25 billion in debt, which is impressive to say the least.
Yeah.
I mean, they are paying down, but not by much. I will say, since the acquisition, cash flows have done great. They're definitely increasing.
Yeah,
it's definitely going more in the right direction than bad.
Yeah, it has. And earnings now, for the first time in many years, positive. But look at the debt they have taken on also in that same year.
Yeah, but if they're paying the debt down and they're going to start generating earnings, I mean, book value finally increased for the first time in a few years, since before COVID.
Can you find them on Whale Wisdom? Because I can't find them there.
Hang on, I'm just trying to pull them up.
Or they are named El Dorado Resorts or something weird.
Well, it looks like it's under a few different names here. So, you said Icon bought this?
Well, I saw it says on the news section in Seeking Alpha, Caesars Entertainment jumps after report of Carl Icahn's stake update.
Yeah, that's brand new because it's not even in his last filing.
No, I couldn't find anything from him on the Insiders or on Whale Wisdom. And I even searched the, the Fintel, the 13D filings. I didn't see him there even.
Yeah, I mean, it could just be word of mouth so far, and he hasn't had to say just yet that he owns it. But if that's true, I mean, that's a huge pop. 25 million shares changed hands this last yesterday.
Here is a quote. Icahn has a sizable stake in Caesars, according to a Bloomberg report on Friday, which cited people familiar with the matter. The exact size of the stake and Icahn's intentions were not immediately known. And then he's saying, I like Caesars and I own some stock. I would never do activism in Caesars, he's saying. So maybe a little bit of a different play for Carl Icahn than what we are used to.
Yeah, I mean, he has had positions where he hasn't tried to become an activist. He just thinks that it's undervalued, which I could see why he's arguing here with the turnaround. And most people are probably just looking at the debt and looking at the balance sheet and how that debt's not necessarily benefiting them just yet. But the fact that earnings are that much up, I actually think that was probably a good acquisition on their part, and it looks like things are going well.
Yeah.
This person said there's a Seeking Alpha article where the author calculates that the value of the real estate holding exceeds the enterprise value of Caesar.
Yeah, I saw that.
And it said of the 25 billion, actually 11.4 billion are lease obligations.
Oh, of the debt?
Yeah, so almost half the debt is actually just leases.
Yeah. And I'm reading one article now. Relative to digital pure play, Caesars benefits from a customer database of 60 million, whereby it can develop digital customer relationship at a very low cost. That's that's a good thing to have.
Oh man, I'm putting my information there. I can't believe it's June.
Yeah.
Insider, good fundamentals, bought, definitely on deck. Has high debt, but not crazy. Does it pay dividend?
No, they don't.
No.
And
yeah, I'm thinking
that
CABO.
article who are talking about their real estate is also saying that there's a high probability that someone is going to buy some of the casinos they have in Indiana before the year end of 2024.
Interesting.
Yeah, if they expect to sell off some assets as well. And a lot of the debt you said was leases, right?
Yeah, so I'm actually trying to look at this from a different perspective because you could argue it should be a little bit higher in terms of valuation.
Yeah, and if that is true with the real estate they own and stuff like that, you know, I don't think the debt is a big issue here, even if it's high, because they can control it.
Yeah, I mean, I'll keep an eye on this one. This one, adding in, putting it on deck as well.
But a bit scary in the short term here that they had such a, it's not a massive jump, but almost 12% in one day on Friday. You know, if you check the volume on the chart, it stands out that day. So maybe it will drop a little bit in the next days here.
Yeah, I mean, like I said, I'll just keep an eye on it. I think this one would be one that's probably a little bit slower of a play, but possibly could trickle up in a positive direction here.
Yeah.
Yeah, the other thing, you know what I forgot? It's definitely large. Like it's kind of large for what I typically would look at too.
Yeah, it is on the larger size for sure.
And you know, it's not that I care that a company is large. You know, that could be good things, but at the same time too, it can lead towards it's just harder for these to grow and to see huge upside on some of these companies. But I could see this get back up to, I don't know, like $60.
Yeah.
All right. Pull apps back up here.
Yeah.
Had a really rough last year.
Yeah, I'm trying to pull up the data here. I'm having some issues. Let me check.
Yeah, I gotta look. You know, debts really went up in the past few years. Earnings have went through the floor. Definitely looks ugly at the end here.
Yeah.
And enterprise value is increasing with all this debt. They did pay off a decent amount of the debt, although they did dilute shareholders too. So, and I mean, if you look in general, they're not afraid to dilute the stock. Just in 2014, there's 33 million shares outstanding. Now there's over 100.
Yeah, I can see that now.
So they had a few years of positive even EBITDA and EBIT, but now it's back to negative. Makes me think this one's starting to look a little uglier.
Yeah, I think they also historically they are not generating too much cash.
Yeah, right.
Greenhaven is involved.
Yeah, that's always worked out well for us. Wow. Not that Michael Wiggins, I always think, puts out that great of articles, but he is telling us that this thing's dead.
Bearish.
Very.
Yeah. Yeah, that guy writes a lot of articles. He used to belong, he says in the comments.
Oh, was this the one he was super bullish on, and then all of a sudden he said, like, don't buy?
He has a hold rating for quite some time.
Yeah. I don't know.
Yeah.
I actually want to go into the earnings transcript and just see what are they saying they're doing here. So he's proud of his team.
Yeah, I saw one guy was commenting on this conference call actually that they seemed very bullish for the future, but I mean with this performance, do you trust that?
I wouldn't say I was proud of the quarter.
No.
I mean, he can say he's proud of his team, but you know, that might just be him being nice.
Yeah. Yeah, I think this needs way more for me, but
how much cash do they have?
I've seen it before.
28
million.
I just pictured this getting diluted more.
Yeah, and like you said, they have a history of doing that as well. My sheet actually almost doubled the share count to delever.
And when is this debt due?
I think they have 0 in short term, so...
Yeah, that's what I saw, so that's why I'm wondering. Oh, it's a revolver. They have 2 revolvers, it looks like.
Yeah.
Oh, no, they have 1. Sorry, it's just the different years. It's got a variable interest rate. That's brutal. Why do people use variable interest rates? That always seems like such a bad idea to me.
I can't find where it is due though.
Matures in 26.
There it is. Yeah. April 26th.
Yeah, I don't know. It looks kind of rough to me, to be honest.
Yeah, I agree with that. I'm
I
not
just want
confident
to
at all.
update this in my list here because I had this on deck, and I think I'm going to take it off for now.
Yeah.
High debt needs more. I mean, could it trade back up, you know, on some kind of turnaround? Possibly, yes. Oh, let me put revolve. I had that in my notes that revolver ends in 26. Never mind, doesn't matter. Just shy of $3 and $2, which it's already down to that right now. Is kind of all right. Somewhere around here, and then like $1.40, somewhere in there. I'll keep an eye on this, and if it keeps breaking to some new lows, just to see if maybe the chart could ever pop in our favor. But I don't know. They're gonna need like a turnaround or something.
Yeah.
Next, I got Wolf.
Yeah. I think what kind of company is this?
Semiconductor.
Okay.
It might have caught my interest from some of the insider buy. This last year looks really terrible.
Yeah,
Especially the past few years look pretty terrible.
But saying that though, that's sometimes this is where you should look. But 18% short interest, and I guess there's a reason for that.
Yeah, I mean, share count's going up, margins are all down, book value's down. They are generating negative cash flow and really negative simple free cash flow. So I hope that CapEx is going to turn something around, because they just spent $1.8 billion in CapEx this last year.
Yeah, I see. That's very high. They have sold assets the last 3 years, so I guess they are trying to do something.
Oof. Taking on a lot of debt.
Yeah.
They have a ton of cash, don't get me wrong, but
there was a few insiders buying in February this year.
yeah, I think that, like I said, that's kind of what caught my eye here. But
Yeah.
Stone Fox Capital's right at the bottom.
Yeah.
He's saying that it's going to be a wait until this turns around.
Could be right on that. But once again, though, he has a strong buy for a long time on these.
Yeah, I mean, he honestly, you know, we were picking on him before, but if he's a long-term investor and he's holding through these downtrends, I mean, that's part of the game. You know, you buy it, you hold it. You know, regardless if even if you don't think the thesis has changed, that's what you do. So I won't knock the guy. He said he's been a CPA for 30 years, so he knows his stuff, I'm sure.
Yeah. His first article was a hold rating, it seems like, in 22.
He says year 25 is when they'll turn EBITDA positive and operating cash flow positive in 26. So he's really looking at the and apparently they're thinking about getting money from the CHIPS Act. And Biden also apparently, you know, now that he's blocking some of the manufacturing from China, that could benefit, you know, an American company in the supply chain.
Yeah.
So possibly a good narrative on this. But yeah, I mean, it's got really poor fundamentals and it looks rough. So this one's going to be kind of a watch, I think. I mean, I like the chart. Did you?
Yeah.
But it's tough to say that I like the stock.
Yeah.
I mean, there's insider buys, like you said. Tech definitely needs a turnaround. High debt.
I am not.
Management.
I struggle with this one. I think.
Fundamentals definitely needs more.
High short interest.
Yeah, it seems pricey here.
Yeah, it does. And I mean, the market cap is also, it's not a small company.
Yeah. Yeah, if this dropped more in price, I think I'd be more interested here.
Yeah. This previous year looks rough.
Yeah, it does.
For sure.
What time frame?
But it's about that capex. I saw there was some comment on one of the articles talking about it's a bit scary that they have invested so much in a couple of things, and I assume that's where you see this high capex from, right?
Yeah. It's tough to say.
Yeah.
I almost want to put it on deck just because I want to watch it.
Yeah.
Not because I really am impressed, but I think I'm going to put it on deck just to keep an eye on it.
Yeah.
All right. I do got to get going here. I don't know. You want to try and do one more real quick?
Yeah, all good. I was thinking the same actually. I was a bit surprised that I managed to add a few tickers today to the tracker. I didn't, when I just briefly screened before, I didn't think it was too many things that was interesting here, but it's good.
Oh, some days you get lucky.
Yeah.
All right. This is MOMO. MOMO.
I saw that in the screen, but I saw it was is it a Chinese company?
Yeah, it is. But they have pretty good data. So sometimes, I don't know, sometimes when I can get all the data filled in for it, I don't necessarily trust it all, but it just gives me a little bit more confidence that at least they're like doing everything. And then in the data, if something looks really strange to me, that's where I'll start to question things.
Yeah.
But to me, like look at like 2022 for instance, like they reported a really rough year. Like for them to report that, like if for instance everything just looks good always, like it's just always improving everything, that scares me.
Yeah.
But
Yeah.
you know, it looks like they're taking into consideration what's actually going on some of these numbers. So
Yeah.
you know, and they list out their debt. They're buying shares back, but apparently doing that with, although they paid a lot of debt down, their cash flow is going way up. So something here. See, yeah, now something doesn't look right to me.
Yeah.
Like cash is gone way up. Assets have gone way down, except they didn't purchase or sell anything. And this came during the year when everything looked ugly.
And they bought back shares.
And they somehow bought back shares. So they bought back shares. They paid back debt. They increased their money supply.
But they're not generating too much cash.
And they didn't generate that much cash. So I kind of agree with you just on that right there. This might be a pass for me because that doesn't make any sense.
No.
Like that's literally impossible. And they're paying a dividend.
Oh yeah, true. Well, maybe we will see them on Hindenburg. Remember that Chinese theme park company that they wrote a short report on?
Yeah, I agree with you. Actually, this looks way too good to be true. This is definitely not true.
Yeah.
There's no way. And it does trade kind of crazy, but whatever.
Has some spikes there, yeah.
I just want to look on, just real quick on Seeking, see if anyone's saying anything. But this looks kind of fraudulent to me.
Yeah.
It says weak guidance has been priced in.
Oh, yeah.
You know, everyone's saying just by looking at the numbers, it looks good, which I agree, it looks good, but the numbers don't make sense to me.
I agree with that. I was thinking the same here, that maybe they are not critical enough in these headlines, at least. Just scrolling down in the articles here.
I wish I had a friend that I could talk to about stuff from China, because it would help to understand some of this stuff a little bit better. Like, does everyone really use this, or is it like, you know what I mean?
Yeah, I was sitting here thinking just now, because Barry buys things in China all the time.
Yeah, but he buys like Baba
must
and
have
some of the big companies that, like, you know, are legit.
Yeah, that's true though. Yeah.
Not that I
Yeah,
mean,
but
I'm not saying this isn't a big company. How much is it? It's a $1 billion market cap.
Yeah.
All right. I'm just gonna update it in my database. I'm gonna keep it off my on deck list though, just because, like I said, it looks like a fraud. Good fundamentals, poor narrative.
Some comments also like they probably moved some cash from China to Cayman Islands. There's a 10% expatriation tax, but when the cash is out of China, it can be used to buy back. So seems there's like a lot of things going on here, right?
Yeah, well, I mean, for any kind of ADR type thing, because China's technically not allowed to sell the shares in the United States on our stock market unless they do through the Cayman Islands as a ADR, like as a separate company. So that's how it works. But at the same time, like I said, this just doesn't make any sense to me.
Yeah.
How do you not really generate that much in cash? Like, to be honest, if I look at the last 3 years here, they're negative cash.
Yeah.
During that time, they paid down $300 million in debt. They bought back 10 million shares.
Yeah.
And they increased their cash amount by 300 million.
Yeah.
So that's,
I think
that's like $650 million. That, where did that come from?
But I think that's enough, isn't it?
Like, that makes no sense to me. And the stock prices went down, right? What's the chart look like? Yeah, and the stock price is down.
Yeah.
What did you say short interest was on this? Did you look at it?
No, I haven't said anything because I didn't pull them up.
Here, no, that's all good. I'm gonna look. Yeah, it's low. It's only almost 2%, but it's low.
Yeah.
Yeah, I don't know.
Oh, sometimes these are weird, and it's not that I'm like confident that the story our numbers show is accurate. Maybe our data is wrong or something like that, but I just don't trust it, you know. I can't trust it. Which is why I'm passing on a lot of these.
Oh, okay. All right. This is good here. This guy said he's bullish. He's like, a lot of people seem confused about Momo's cash position. It's the company's cash equivalents, short-term deposit, long-term deposit, short-term investments, and restricted cash total 1.8 million. Some cash equivalents is in the form of long-term assets, as they probably invested in some long-duration bonds. So that's how they've been able to increase their cash position, increase the dividend and buyback, even though the net cash has been increasing.
Okay.
And now all three business segments are now profitable. If that's, now I want to look at the balance sheet, because if that's true that they have a lot of that in
investments.
Yeah, if that's in investments, then that totally changes everything.
Yeah.
Long-term restricted cash 2.6 million, long-term deposits 3.9 billion. So
long-term,
maybe this does look really good, actually. I don't know if that's true. This is really undervalued.
But it's not though. Go to the top, because that's in yen. You need to look at the middle column.
Yeah, but if it's in okay, so it's in thousands.
This one.
Yeah, but this is old too. This isn't 2024.
Yeah.
Yeah, I don't know. Now that you say, yeah, okay, that good point. Because what did he say the cash position was in that? Hold on.
He said 1.8, didn't he?
Yeah, 1.8 million, and their long-term restricted cash was 13. Whatever RMB is, rumbles or rubles or whatever their money's in. he said total 13. I mean, I get 16 on this one. But that would be 2.2. But that's total assets. That's not just cash.
No.
Although the rest of this stuff isn't all that much. So I don't know. 2.2 billion in cash. I don't know. I mean, no matter what, whether I'm right or wrong or whatever, it's definitely interesting if that's true, though.
Yeah. But how can we figure that out in a Chinese company? Because that data is also old.
Yeah, but the way I would do it though is this would just be a small position.
Yeah.
You know, I wouldn't take a huge position in it, but if it's right, I mean, it's a big deal to know that that's why it looks the way it looks.
Yeah.
Because they're saying 1 billion in cash here, and if I go back to, we got about 1 billion in total current assets, so that number might make sense.
Yeah, I think your sheet matches the column in the middle there.
So cash received on maturity of short-term deposits. It's actually much more annoying that this is in like,
different currencies.
Look how this is listed. It's listed as yen, dollar, and then yen and yen.
Yeah.
I mean, it does say cash received on maturity of long-term deposits here at like here's 239.
Did that guy say what they were invested in?
He just said it could be longer duration bonds.
Oh, okay. A bit weird on this one, like maybe not weird, but it's a bit confusing.
I kind of like this. If that's true.
Yeah. Somewhat of a big if, though.
Yeah, I'm gonna put it on deck. Oh, it's definitely an if.
Yeah.
I'll put that around 10. I'll take this note out because I kind of know what's going on now. It's not that it looks like a fraud; it's that the cash might be held up in long-term investments.
Yeah.
Yeah, okay, whatever. That's fine. All right, I think I'm gonna call it there.
Yeah. Sounds good.
Thank you for anybody who was tuning in today. Appreciate you guys always. Hope you guys were able to get something from the stream today. I know we've been kind of covering a bunch of random stuff, and sorry I went on a little bit of a tangent there with Momo, but I didn't expect that to come up quite like that.
That's how it is. This game that we are doing, so it's all good.
Probably get rid of that. All right. I will be on Tuesday, my normal time. Johnny will be on Thursday.
Yep.
Yeah. Just trying to think if there's anything else. And like I said, guys, I'm excited with the portfolio here. We'll see what next week brings. I know that in general the markets were kind of down this week, which I think was a lot of people were saying it was just kind of like the tech sector, which is obviously really overweighted in some things. So if that sector does bad, it looks rough on the whole. But value did well, so I'll take that.
Yeah.
And then you said you're gonna buy a huge Momo position now, right?
I'm all in.
Oh, nice. Good. Definitely.
No, but I'm also, I think I said this on Thursday, but my plan now is to buy more stuff. I want to diversify the portfolio a bit. I want to be more involved in more tickers again. I know soon I can do it with my financial situation and stuff like that. So I'm a bit excited for, the coming months now, even though usually the summer is a bit slow, right? Also in stock market.
It depends.
Yeah, it depends on where you look, I guess.
Yeah.
Yeah.
All right. Well, once again, thank you everybody for tuning in. We will see. I'll see everybody on Tuesday. Johnny on Thursday. If you guys have any questions or anything, keep throwing stuff in the comments. We appreciate it. Anybody who subscribed today, thank you so much. And everybody, enjoy the weekend.
Yep. Bye bye.
Peace.